What is the difference between assets and liabilities? We're going to talk about that in detail in today's video. We're going to talk about assets. We're going to talk about short-term, long-term, fixed. We're going to talk about liabilities and how do you build a net worth statement. So get a pen and paper. We have a lot to talk about today. There's 4 specific things I want you to note. What is an asset and what types of assets are there? What is a liability and what kind of liabilities are there? And then note together creates a balance sheet. Assets minus liabilities equal your net worth. So when I say make millionaires, just to get started, I make net worth millionaires. There are people all over the internet, right? I call that the bathroom wall because people can say anything about anyone and any exaggeration. There are people who say they make millionaires and they'll help your company get to $1 million. But, let me tell you, if your company, which is an asset, grosses $1 million and you spend $900,000, you're only worth $100,000 in my calculations, which you're right. So we're going for net worth millionaires, not $1 million companies. Might have one of those. You might have an 8-figure company. You might have a 9-figure company along the way. I want your net worth, your personal family legacy net worth to be $1 million or more. I need 3 to 5 years to do it. So let's talk about this thing called the balance sheet. I never learned about it. I grew up on a farm in Nebraska. No one told me one thing that there was an asset or a liability. I didn't know all that equipment all over the farm were assets of the farm. So what is an asset? So to be specific and extremely accurate, I actually had it all written out, right? So I'm going to actually read some of this stuff to you, like an asset. A business asset are all the items of value that you purchased in a transaction. So that includes, like if you bought an asset in real estate and it came furnished, everything inside of that would be included in the asset in the way you book it on your balance sheet inside your QuickBooks, because all of this needs to be booked right. And a little hint, just a little word of caution off to the side here. Bookkeepers, a lot of times, are P&L bookkeepers, meaning they can book income and expenses. They don't know how to book assets. And I can tell you, those of you who are starting to acquire assets, whether it's real estate or gas and oil or a business, there's all sorts of booking into a proper accounting system that are going to be required. So make sure they're not just income and expense bookkeepers when you're getting this stuff booked. Now, the types of assets, short-term assets and long-term assets, and they're fixed. Right, so short-term assets are cash, inventory, accounts receivable, any of your collections, prepaid expenses. A lot of times you'll prepay expenses for the year before. All right, so like mail, like I don't know how many times when we used to ship a ton of stuff, we would prepay shipping because we want the deduction in that tax year end. So there's a lot of strategy to what I'm talking about. And if you don't have a good team, it's what I put together for you. Integrated Wealth Systems is a team. We have the team and we have the systems to make you millionaires and help your businesses run and really help them run. Now, inside of long-term assets, those are things like property, your plant, the building, equipment, notes receivable, right? So those are the long-term assets. So fixed assets typically are in your long-term position, right? They're your building, they're your plant, they're your equipment. You want to dissect that a little bit. And again, this is where you really want a tax team, not a bookkeeping team, to really determine like a depreciation schedule. What can you appreciate some of the building? When I owned an aircraft, right, big asset, $3 million aircraft, it had a very specific 5-year depreciation schedule, and you wanted to book everything inside of the plane differently. So I had several entities own one asset, one big asset. So again, this is a lot of tax counsel. This isn't stuff you're just going to look up here on YouTube and here out on the internet. You really want an expert. I have phenomenal experts. Please, please. At the end of our conversation, I'm going to give you an application to apply to work with them. They only work with the serious, not just casual, maybe kind of sort of people. Here's what I would say. Our teams work with the committed, not the interested. So are you committed? We're committed. Now let's go to the liability side of this conversation. Liabilities, they're the claims on asset. So for example, in simple terms, a piece of real estate, right? Your real estate's the assets, the mortgage against it's going to be the liability because you owe on that. So assets are what you own. The liability is what you owe. It's direct claim on an asset, such as a bank loan, again, in a mortgage situation. And a lot of times, what's interesting about many people who actually do hard money loans, they actually record their liabilities. They don't go to the courthouse. They don't record that debt. which really then makes it more of a personal guarantee between two people. So you really want to have recorded liability at the courthouse or with a financial institute, not just casual between two people. And just because it's on your balance sheet doesn't mean you're going to win in court. You're going to have liabilities recorded. So examples of liabilities, right? Obviously, they're mortgages. It's debt against the property. Liabilities can also just come in the form of a tenant. I'm going to say people. People can become liabilities inside the asset that you own. So a lot of times, especially like high employee or high transactional companies, they'll put the liability, meaning the interaction of people. Like I'll give you an exact example. I have a client who has a lot of employees and has a lot of equipment, right? It is in the construction and the real estate space. 3 entities do all of that. One entity owns the core asset of the real estate. The next entity owns the liability called the equipment. Now, inside that company, you could say the equipment is asset, but really to the entire umbrella of the company, that equipment, if it hurts somebody, is a huge liability. So you isolate the liability inside one LLC. And then people, it's a staffing agency. So again, in the umbrella of it all, people could sue for that highest asset. So you have 3 companies and you divide assets and liabilities. Now, for those of you that are higher net worth, you're going to start understanding a lot of this. I have companies that I coach and mentor, construction, real estate, equipment companies, employee companies. They may have 7 to 9 companies running one umbrella organization to divide up where the assets are and where the liabilities are. So that's an example. You have real estate, equipment, and employees, 3 different entities and 3 different divisions. The entire umbrella of assets and liabilities, it's just protected. And it's also protected from tax strategies. So there's a lot of advanced conversation in this. For those of you just to get started, chapter 10 of my Millionaire Maker book, I call it Walk the Beans, right? Because it's the basics, right? So when I grew up in Nebraska, by the way, if you didn't know that, before they had equipment, way back in the day, yes, we used to walk the beans, meaning you walk rows of beans with a little knife and you'd have to cut out all the weeds. It was a very exciting summer job. Extremely lucrative, but really boring. You get a great tan. That was about all that was good about it. My point is walk the beans is basics. And it's back to that baseline of, do you know where you are? Do you have the right team? Do you have the right systems so you can manage your assets and liabilities? So if anything ever happens, you're protected. And those of you who have intellectual property, that needs to be completely, that is an asset that is golden. Your database is an asset that's golden. Those should be in its own company. And if you ask my tax team, because I've been doing this for 20 years, so it's not advice, but it's what most of my authors and publishers and folks that are doing a lot of content, inside of a C Corp in Nevada, in our office is where we house that company and give you a lease, protect your database, protect your URLs, and protect your intellectual property. And it does business with your operating company. So there's a lot of strategy to this, and there's a lot of reasons you want to know what your assets are, know your liabilities, and not just from what QuickBooks and Quicken says. It's from the behavior of the organization and what it's designed to do. So our teams will help you do that. For us to get started, I need 2 things. I need you to subscribe to this channel, because if you thought this was big content, wait till we really roll up our sleeves, right? So I want you to subscribe, click the notification button, and share this with your friends. Share it with your family. A lot of people need to be in this conversation. I don't know how many people say, how come people don't know about you? Well, you know, the big financial firms have billion-dollar budgets, multi-million-dollar budgets. Good old me, I'm just here to help you get financially literate. So I need you to share the knowledge. Subscribe and share, please. And the first thing I want you to do is go into the notes. I want you to take the personality quiz. It's called the Financial Personality Quiz. It tells me who you are. And then from there, we're going to go into an application. And if you are really serious, committed, not interested, I'll get you in touch with our tax team and our corporate structure team so we can help you decide what is the best structure for you and your business. I'll give you one last example. I have a brand new chiropractic team, big team, making a lot of money. They are going from 1 company to 7 companies in one conversation with us. Just how their taxes are, how their structure is. Again, if you're putting your hands on another person in chiropractic, that's a huge liability. And then if you're going to sell supplements, another liability. So you need to be spread out. You need to do it right. You need the pros, not those legal Zooms or those .coms that can do it cheap and free, because this is your life. This is your legacy. So do it right. So again, click on the link, take the quiz, do the application. Make sure you're here tomorrow because we have way more content coming. Talk then.